Hello again everyone, I hope you're all doing really well. I thought it was about time I did another quick update on ContextLogic Stock, or as it is better known by its ticker symbol, WISH. Since my last update, the stock has been on a gradual upward trend since the stock price took that big hit following the most recent June quarter results. What I want to do in this clip is take a look at the recent trading patterns for the stock and try to get an idea on just where it is heading, as well as take a look at the latest valuation and analyst predictions around the discount e-commerce platform. Finally, I will have a look at a potential macro condition which, in the event if it does occur, could be the catalyst for the ContextLogic stock to further improve its trajectory upwards. This is a quick update, so let's get straight into this review of the most memeable meme stock on the market. So looking at this hourly chart, which catches most of the trading activity following the stock value falling from the disappointing June quarter results, we can see that the stock hit a low point in mid-August at below $6.20 per share. It is now worth pointing out that this low was perhaps exacerbated by particularly weak trading conditions throughout much of that week. However, since then, there appears to be a good trajectory of recovery for the stock. When I did my last update, I placed this purple line as I believe it was showing a sign of higher resistance. Pleasingly, there has been a sustained move above this point since late on Friday. The $7 mark may now prove to be a point of lower resistance going forward. Only time will tell, however. Adding a few trend lines to the chart, we can see that there is a pleasing upward trend in higher lows, and there is a more modest upward trend in terms of higher highs. It would seem that the $7.40 price point is forming as a new point of upper resistance for the stock if these patterns continue to hold as they have. And not that you can rely on past trends to predict the future, but it looks like the current consolidation we are seeing at the moment resembles what was seen around the 23rd of August, which perhaps suggests another push upward towards a new higher high could be coming soon, possibly even during Wednesday's trade. Based on the neutral position of the RSI and the fact that the stock is near the center of the Bollinger Bands, there is a case to be made that the stock may open Tuesday's session and maintain the current holding pattern that seems to be emerging. This holding pattern thesis has been further evidenced in the flat trading that was seen in the aftermarket session yesterday. So there seems to be no technical signals to suggest which way the stock will likely go when it opens trade on Wednesday. Looking at some of the financials and analyst reflections associated with the ContextLogic stock, the average broker consensus has been downgraded to a hold based on the 11 brokers covering the stock. This downgrade from a buy signal is on the back of the disappointing news from June's results. These results have also seen the average 12-month target price consensus fall from $14 per share to $13.67. This is understandable as these results led to a reduction in the overall equity of the company to give the business a tangible book value of $1.37, down from $1.50. One silver lining, however, from the results was that there had been an improvement to gross profit margins, so while there was still a loss of 17 cents per share, which was greater than the 14 cents per share loss that was predicted for June, this loss was still an improvement on the loss experienced in the quarter before of 21 cents per share. In fact, this was the smallest quarterly loss ContextLogic has experienced since going public in 2020. Silver linings aside, one of the poor signs for WISH is that they have consecutively missed earnings forecasts since going public, which has overshadowed many of the smaller wins the company has experienced. Case in point, the strong growth they experienced in logistics revenue, which had doubled compared to the first half of 2020. Now, as for the potential growth event I was alluding to, I think many followers of WISH stock realize that there is a significant level of competition for the stock compared to other e-commerce platforms experienced now that the economy has reopened. The nature of long delivery times for low-cost goods loses a lot of its value proposition when these can now be shopped for in local bricks and mortar stores. The e-commerce takeover people were expecting at the height of the pandemic is no doubt what inflated expectations for stocks like WISH. However, the trust that consumers have in bricks and mortar retail settings has proved to be stronger and more stubborn than many were perhaps expecting. That being said, we are still living in a pandemic. In fact, where I live in Australia is currently in lockdown, as is about half of the population of my country. And as can be seen on the screen, There are COVID warning alarms being raised in other parts of the world. Could we see a return to the conditions that had made ContextLogic Stock such an appealing one? If so, this would be the conditions that would allow a further solid growth and expansion phase for Wish, in my opinion. While I don't wish lockdowns upon the world, it would potentially be quite a good thing for the ContextLogic stock. So it's a bit of a catch-22 really. So finally, my approach to the stock is that I want to still accrue and add it to my portfolio. I do believe that there is still potential for the stock, and I look at the current 12-month price targets as a pleasing sign, as they currently represent almost a 100% upside on the current stock price, if they are indeed realized. Anyway, what do you guys think about the Wish stock? Are you still long on the stock? Do you think the $13.67 price target is a realistic one? Let me know your thoughts in the comments below. Also, if you are new here, I would like to let you know that I'm looking to set my channel up as a social enterprise in the future, meaning I want to use the profits generated from YouTube advertising to support a range of good causes that I feel passionate about. So by watching videos and following the channel, people are able to help make a difference to these causes without donating money, but simply by donating their time and attention, as the profits come from YouTube advertising. I think it's a unique approach to making a difference in the world, and I would love to have others join up and be a part of all that. Anyway, until next time guys, may the markets trade in your favor. Cheers.